Welcome to Real Estate for Real People, hosted by Shannon and Tamara Stone. As award-winning real estate professionals, the Stone sisters have spent years helping people navigate the complexities of buying, selling, and investing in real estate. From first-time homebuyers to seasoned investors, Real Estate for Real People is the go-to resource for anyone looking to make smart decisions in the world of real estate. So sit back, relax, and get ready to learn from some of the best in the business.
Everybody, thank you for joining us again. It's Tamara with Stone Sisters Group, and we have another issue of Real Estate for Real People today. And I'm really looking forward to today's guest. She's a personal friend, started as a client, has become a friend, and it really exciting watching her business grow. And she's going to have some phenomenal tips and ideas and ways for all of us to look at getting a mortgage and qualifying and what the best way to do this whole thing is. So without further ado, this is my guest, Juliana Wong. She is with a company called JWC Mortgages. It's her own firm, her own mortgage brokerage. And Juliana, you've got the floor. Tell us a little bit about you and your story getting into being a mortgage broker.
Yes, absolutely. Thank you, Tamara. So yes, my name is Juliana Wong. I am owner and operator of JWC Mortgages. It's an independent brokerage that we opened up this year. So we're all female led, all embracing female empowerment, and really trying to educate those in the finance world going through a means of empathy and trust and kind of relating to clients on a little bit more of a personal level than what they would get through the bank.
Wow.
Yes, so we are a new brokerage, but we're not new to the industry. I've been in the industry for 6 years, done lots and lots and lots of mortgages from start to finish, whether it be first-time home buyers or retirees. So you name it, we've seen it all.
Love that. I love that. So yeah, that's, I wasn't aware actually of the we got a lot of feedback here, but I wasn't aware of the all female company. I think that's exciting. And even for our male listeners, I think it's great. I think, women, not to generalize, but I think a lot of women in business tend to have a little more empathy, tend to slow things down a bit. I know going back 30,000 years ago, it feels like that, but first house I bought, I wasn't married yet. I'd been a realtor for about a year and a half and got a mortgage and was buying my first place. And it was so daunting. Everybody spoke so quickly. I had no idea how expensive it all was. And, it would have been nice to have it, slowed down and just explained a bit more. So
Absolutely. Everybody says it's just a mortgage, but truly there's so many pieces and it's complex. And I'd much rather slow it down, take a step-by-step approach and hold your hands and let's make sure you understand and have an informed decision every step of the way, not just jump here, here's your approval. No. Let's understand what we're doing, what we're talking about. What do you need? How can I help you? Right? We're a partnership.
Mm-hmm.
Absolutely.
That's great. I think that's really good. So let's dive right into it because I think that's, there's lots of talk. There's a lot of uncertainty out there. We had the heyday of the market through COVID where, everybody was buying homes, not really thinking about it. Money was essentially free.
Yes.
And we all knew that we were going to have to pay for it somehow. I think we thought it would be a lot longer away than it is now. And of course, rates have changed dramatically and banks have become much more challenging, I guess I'm going to say. And, they're not just handing money out. So
absolutely. Yeah.
Yeah.
I mean, I think the big thing too, right, is in COVID, everybody was qualifying at such a much lower rate. Yes, they were stress tested, but it was stress tested at 5.25. And now we're stress testing 2% above contract, which for a while there was at 7-8%. So it made a big difference for our buyers trying to get into the market. Things have definitely calmed down, which is great to see. We're seeing rates come down, which is fantastic. Rates right now
How
are
much
mid
how much
fours.
have they, yeah, how much have they come down?
Yeah. Yeah. So I would say, like Christmas time, we were around 6.5. And now
Mhm.
we're seeing rates, 4.5 on an insured purchase or even high fours on an uninsured. So
Wow.
for sure, we're getting there. It's coming down dramatically. And I mean, historically speaking, a rate below 5% is still considered really good.
Mhm.
It's hard to compare after we've seen those low twos,
Mhm.
high one rates back during
Mhm.
COVID and the pandemic. But realistically, we're settling out. We're getting into a much more reasonable market.
Yeah.
Things are settling down for sure. As far as
Yeah,
rates
that's
go.
good.
As far as rates go.
Yeah.
Yeah.
Yeah. No, I think that's, I'm grateful. I think it's a really good thing that Canada has, that they brought into place the stress test rules and
Mhm.
really trying to protect Canadians in the event that rates went up, which of course they have.
They did.
And, I know it makes it way harder for people to qualify, with this stress test, but it's a good thing. Can you describe that? I know we've got some listeners who haven't purchased a home before.
Mhm.
What does that mean?
Yeah,
The
so
stress test.
basically when we do an application, you have to qualify and debt service based on your income 2% above the contract rate. So if the posted rate that we can get you is 4.5, you have to qualify based on 2% above that. So
Mhm.
6.5. So and what I mean when I say qualify, we're really truly looking at money coming in versus money going out. And that's yes with the house and your mortgage payments and your property taxes and your strata fees if it's a condo or a townhouse or stuff like that. But then also the big picture. So if there's a car loan or if there's credit card debt or student loan debt, we basically need to know, can you manage this based on the restrictions that the government has in place? So if that's yes, then great. If it's no, well then let's find a way to negotiate that. Do we pay off a student loan and qualify for more? Do we find a property that has a basement suite and has a mortgage helper so then you have more income coming in? Or do you get a gift from mom and dad to help that down
Mhm.
payment? And so there's these restrictions, but then it's all about finding the right fit and how do we make it work for you? How do we get you to where you need to be?
Mhm. Mhm. I like that. So, how much, I'm looking at average prices, in Kelowna
Mhm.
currently, and we're not as high as elsewhere, some other
Yes.
places in the country, but it's high. I know single family home is hovering around $1 million,
Yes.
um, with
Yes.
or without a suite, condos, and there's some opportunities out there, but, you can get a condo maybe in the 400,000s. I see some in the 300s, townhome 600, 700. How much income is that going to take? How much down payment does somebody need?
You know what? That's a great question. It's a very loaded question because it
Yeah,
it
sorry.
definitely no,
I put you
it's
on the
great
spot. This
though.
is a
It's
test.
great. No, it's okay because you know what? It really depends. Kind of the rule of thumb is that for every $100,000 that you borrow, it's about a
Mhm.
$500 a month payment. So,
Okay.
and then, income, I would say our average income to qualify for a home here in Kelowna and net like household income would have to be, 100 grand, 120 grand. Anybody who's kind
Wow.
of below that, it's creative. It's how do we make this work?
Mhm.
Because you're right, house prices in Kelowna have just dramatically
Mhm.
increased. I
Mhm.
mean,
Mhm.
I don't want to date myself, but I think about 10 years ago when I purchased my first townhome at that $300,000 range, we don't see that price anymore. It's just like
Yeah.
that's a condo. It's just not it's not our Kelowna
Mhm.
market. We're definitely moving towards the
Mhm.
Vancouver, Toronto house prices. It's not as crazy, but
Mhm.
it's moving up there. So it's
Mhm.
it's difficult.
Oh, it
It
certainly
it is.
is. And, we get a lot of people say, well, I'm going to wait because I think prices are going to drop and the market will
Mm,
shift. And the market fluctuates. Of course, it always has. And I think it always will. But I look at population growth in Kelowna, in our province, in our country, how many people are coming in, everything they talk about supply and demand. We're building like mad here. We're building condos apartment
Yeah.
style condos, certainly like mad. Not much coming up in the single family detached market. Not much in townhomes. We could use more of those as well. But
Hmm.
it, while things will fluctuate, I mean, average prices are down about 16% from a year ago. But then I'm watching the market now going, I think we've passed that downturn that we saw November, December, January.
Yes,
And Shannon is a magician with statistics and really is looking at numbers constantly. And she said, it's going back up again. So
it
it's
is.
interesting
And you know
how,
what? We're starting to see those multiple offers again, unfortunately. Like
Mhm.
it's just a competitive market. There's not much out there for inventory, and people who have waited and said, well, gonna wait for rates to come down, like you say. Well, now rates are down and everybody else is in the same situation and wants to get into this market.
Mhm.
So I'm hoping we're going to stay where we are. The problem is as rates go down, house prices go up.
Mhm.
So it's a bit of a yin and the yang. So your monthly payment doesn't really fluctuate because your interest rate is
Mhm.
lower, but now your house price is $100,000 more. So
Mhm.
truly the best advice I can say is just get into the market. Just get
Mhm.
in and then we'll
Mhm.
refinance when rates are lower, right?
Right.
Um, I would say
Right.
now we've seen far more shorter term rates, so 2, 3 year terms than we've ever seen in the past. And reason just being, we're hoping that in 2 to 3 years, the market stabilizes a bit more. Your term is
Mhm.
up. We can refinance you or transfer you to a different lender with a much better interest rate, no penalty.
Yeah.
So you've
Yeah.
gotten into the house that you needed to. It was a couple years of higher interest rate, and
Mhm.
now your house value has gone up, and we can get you a better interest rate when your term is up. So,
Yeah. Because that's a big one. I mean, I know that's something
mhm,
that Derek and I faced, in selling and paying off a mortgage. These mortgage penalties can just be
oh,
horrific.
they
What's your
can.
advice about that? Can we talk about that for a moment?
Oh, we can. We can. This is where I do feel a little bit passionate about it because a lot of uneducated buyers think we just need the lowest rate, the lowest rate, lowest rate. And it truly is
Mhm.
not about the lowest rate. It's about the best product. Um,
Mhm.
point one or point two in your rate is not going to make a big difference in your monthly payments or anything like that. But a lot
Mhm.
of those rates have something called a bona fide sale clause or restrictions on them so that you can't sell, you can't do anything until your term is up without paying a huge penalty.
Mhm.
Or you can't refinance. That's the only way to break your mortgage is to sell. And so then it locks
Wow.
you in to these
And
terms.
give some examples if you can, because I
Mhm.
know, I
Yeah,
mean, for those, people who haven't
absolutely.
paid a payout penalty or, again, to our listeners who haven't purchased a home before and don't really even know what a payout penalty is, talk about what some
Yeah.
of those fees to the bank can be.
Yeah. So variable rates are typically 3 months interest penalty.
Hmm.
So if
Hmm.
your payment is, $3,000 a month, typically half of that is interest. So
Hmm.
$1,500 times by 3 payments. So you're still looking at about $4,500 to break your penalty. That's on the great side. Like that's a great penalty. That's
I
not
was going to say,
bad.
I'm like, that's not bad.
Yes, that's not bad. If we do one of those products that have like restrictions on them because they're a low rate, sometimes they can be a percentage based on the mortgage balance. So if you have a 300 or a $400,000 mortgage, in Kelowna it tends to be a lot higher than that,
I
and
was
you
going
have
to
to
say,
do
yeah.
3% of that. Like we saw rate like penalties during COVID when people wanted to break and lock into a lower rate of 50, 60,
Yeah.
$70,000
Yeah.
and that's just gone. Like that money
Yeah.
is gone then out of the
Yeah.
equity of your
After
home.
tax dollars that are gone, that
Yes.
you've just
Yes.
gifted to the bank.
To the bank.
So,
Yep. And I think that's what people need to keep in mind is that the banks are a business. So
mhm.
they are doing what's right for them, and that's how their
Yeah.
business model grows. So Unfortunately, if people sign a contract and don't know about the penalties, the bank's just fulfilling their contract, and that's how they're making their money, is the $30,000 or $40,000 penalty. Versus at least
Wow.
coming to a broker, it makes no difference in my personal life to collect a $30,000 penalty. Like, I don't get that. So I would never want one of my clients to be in those products. It's just not worth it. Life is
Well,
so
and
unpredictable.
we meet with a lot of sellers who are looking to make a change, to
Yes.
downsize, to move up. I mean, if you're moving from one home that's $1 million, you're going to buy something for 1.5. You can usually, or often, you can port your mortgage, right? You can take that mortgage with you. But it's astonishing to me and sad to me that we meet with a ton of people, and I say, okay, now you've got a mortgage on your home. They go, yeah, we do. I say, what sort of penalty you're looking at? They're like, oh, it's good. I'm sure it's, it won't be much at all, but they're selling and they're going to go travel for a year, or they're selling and moving to a much lower price community, or what have you. And, sometimes we've had it where we've embarked on listing the home, marketing it, they get an offer, it's sold, and then they find out they have a 20,
Yes.
30, $60,000 penalty. So
Yes. So it's so important, buyers and sellers, right? Because if they're selling and needing to go get a new mortgage, then that's going to affect their down payment for moving forward, right?
yeah, yeah.
So always best to reach out to your lender, or if you're working with a broker, I can reach out to most lenders and find out, what is the penalty now? What are we expecting? And get it in writing so we can go back and say, okay, as of this date, this is what our penalty is looking like. And then you can
Right.
predict, right? You can make that educated decision. Okay, is it wise for me to sell, or do I wait a year when my term is up because I can't afford to pay
Right.
a $60,000 penalty?
Yeah.
Yeah.
Well, and you
It's,
don't want to, you don't
you
want to
don't
pay
want
that.
to. That's a lot of money. That's a lot of money to
Mm-hmm.
just go to the bank of hard-earned dollars
Yeah.
for what, right?
Yeah.
So absolutely.
Tell me what it costs to use you. I mean,
Yeah.
that's something, going back again, a long time ago in 1995, when I got into real estate, mortgage brokers were starting to become a thing, but it was fairly new, here in Kelowna anyway. We didn't have a lot of mortgage brokers, and you went to the bank, or you asked, I would help qualify people. And of course I didn't really know, but I would guesstimate and say, okay, well, how much do you own? How much do you owe? Let's try and guess what sort of payments you can afford. Fast forward to today, to 2023, and people know about mortgage brokers, but I think sometimes people will go to several different mortgage brokers, or several banks and a mortgage
Mhm.
broker. Can you talk to that for a bit?
Absolutely. So, yeah, going to your bank, people expect, like, oh, I've been with Bank A for 30 years. They know me. I should be approved. And unfortunately, you're just a number at the bank. There's no real relationship or anything given there. So, and the bank can only offer what the bank offers. So if they have
Mm-hmm.
product A, B, and C, they can't offer you anything outside of that if you don't fit into their cookie cutter niche markets.
Mm-hmm.
Um, and that goes for all banks, right? That's
Mm-hmm.
across the board, and you'd have to go to each individual bank to shop around or see what each bank offers.
Mm-hmm.
Coming to a broker, oh, go ahead, T.
I was just going to say, and you don't want to do that, or has that changed?
No,
Like, you don't actually want to go get your credit pulled a whole
you
bunch of
don't.
times,
No, it does
because
impact
that
your credit. Yeah,
mm-hmm.
it does. Not as severely as I think what the general public thinks. In
Okay.
saying that though, you would need to explain, like, okay, why have you been to 3 banks? What happened? Why
Mm-hmm.
wouldn't they give you a mortgage? And it's a bit of a red flag. So you're better off to just come to a broker, and we can pull your credit once and then access all those banks and a whole bunch of different other lenders, and basically say, okay, this is what you are, this is what you need, where are our products? So
Right.
as far as pay goes, we're paid by the banks. So we're not
Mm-hmm.
charging our clients fees to bring your mortgage to somebody like TD. TD is paying us for their business. Truly, the
Okay.
only difference is that, TD is paying for overhead of somebody sitting in their office. Well, here they would just be paying me for a mortgage that I'm bringing to
Right.
them. So yeah, we're paid by the lenders in 99% of the scenarios.
Yeah.
And we just have access to so much more than what individual banks can give you. So if there's something funky with, well, I'll take Colonna. Colonna has so many entrepreneurs and small business owners. So
Yeah.
we have a ton of different programs with different lenders, depending on what your business does, what you write off, what you keep as expenses, kind of the whole picture, where to place you and what the best product is.
Right.
And truly, all brokers have access to the same information. They have access to the majority of all the same lenders. It's truly what broker knows how to get your file completed and the
Right.
relationship. I am a big relationship person. And
Mm-hmm.
if you click
Mm-hmm.
with that person, you guys can make great work and you can find out what exactly you need.
Yeah.
Like, do we
Well, and
need
what
a,
I like is how available you are,
yeah,
coming through COVID, coming through, and hopefully we're not heading into too much of this frenzy again where these bidding wars, but,
yes, yes.
I know we've had buyers, some of our agents at Stone Sisters have had, clients who've been pre-approved, and we'll talk about that in a moment, and then want to find out if, can they squeeze it 10,000 more? What do you think? Or, in this, and they've messaged you at 8 p.m. Not that I want to say that you're going to have always phone back, but you've always phoned back. It's nice though, in the heat of the moment. And again, I think that's an advantage to you
Yeah,
versus a regular institutional bank because their hours are much more limited. And real estate is not
absolutely.
9 to 5. It's
It's
evenings,
not.
it's weekends, it's Sundays, it's
Yeah. Well, and you know better than anybody if our buyers are working Monday to Friday 8 to 4, their time to view a home and put in an offer is outside those
Mhm.
times, right?
Yeah,
I mean, I'm
yeah,
sure you get a lot of negotiations that go late into the night of back and forth. And then finally, when we
yeah,
get the accepted offer, it's go time. It's let's get this done as soon as we can, as fast as we
yeah,
can. And
yeah.
and I think that's the big thing, right? All of my clients go through a very strict pre-approval
Good.
phase where I know your financing is secure. It's not a question about financing. It's now just about the property. So we'll
Right.
still put a condition of financing in just to keep everybody safe, but our
Yeah.
clients
Good.
know what can we afford? What can we do? What is the product that I'm going to look for? So a ton of education and one-on-one coaching before we even get to that offer stage so that we're confident.
Yeah.
Yes, we'll have an approval. We just need to basically wait for the paperwork is super
I like
important.
that.
Super
Yeah,
important.
yeah, it definitely is. And then, one thing, so getting pre-approved, of course, is critical. It's, and not just, I wouldn't recommend somebody just go online and look and, you can fill out on RBC. I bank at RBC and go on RBC and go, okay, well, here's what I'd qualify for.
Yes.
But actually going through the steps, because maybe I forgot to tell them about the car I just bought, or,
Yes.
get
Yes.
that pre-approval, speak to you, get it in writing, and
Yes.
then don't buy anything else. Right?
Yes.
Like we've
Don't
had
buy
so many
anything else.
people. Don't go buy a car. Don't buy a boat.
Don't
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 finance
do
a
anything
couch
else.
at. Mm-mm.
At the brick. Yeah. Don't do any of
Mhm.
that. And it's funny though, because sometimes we can pull a little bit of income that a regular institution wouldn't think so. So, if somebody's got a Monday to Friday 8 to 4 job, but then they also have a side gig where they're selling stuff on Etsy and, maybe we can use some of that income to qualify for a little bit more or so it's all about,
Wow.
I don't want to say creativity, but it is about creativity and looking at the overall application and saying, okay, what do we
Yeah.
have? What would you like? And how can we get
Mhm.
there? So
I love
truly
that.
it's a big process for sure. And I know
Mhm.
the paperwork can be a little bit daunting, but it's worth it to know, okay, everything is good to go. I'm confident making this offer at X number because we've run
Yeah.
through the scenarios and you know what the
Mhm.
payment's going to be. You know what things
Mhm.
look like and no
Well,
surprises.
and if
There should
you're
never be any
in, a
surprises.
multiple offer, if you've got an offer
Hmm.
on something and you're in competition, if you know that you are pre-approved, if you can have,
Yes.
you speak to the listing realtor, I know we've done that before where we've said,
Yes.
Juliana is our buyer's mortgage broker. Feel free to call her, or you could send an email or what have you, but just to let them know, we're not just saying we're pre-approved, we're actually pre-approved. And
Absolutely.
because we're seeing lots of offers where people thought they were pre-approved, I guess, with the rate, changes out there with, changing times, people in fact have not been able to qualify.
Absolutely. Yeah. And in those multiple offer scenarios, I think that's where our clients really get that step ahead, because if we go in knowing, then it's like,
Mm-hmm.
okay, well, let's shorten our condition days. Let's take 2 or 3 business days off, and we'll have our conditions off in 4 or 5 days because everything is ready to go. Or let's order the appraisal and have things situated waiting for our accepted offer, so that we know as soon as that acceptance is there, our appraiser is going to be in and confirming the value. So I think there's a lot of little things that go into it, not just the highest price.
Right.
I mean, I
like
got
that.
an accepted offer this morning that we weren't the highest purchase price, but they knew, okay, here's our pre-approval letter, here's a strong deposit, and our short condition days, and we're going to get this financed ASAP. So
Wow.
sellers have the confidence.
So important. I like that.
Yeah.
What are the costs, Juliana? Maybe you can speak to that if you know. So, I know, and again, going back to when I bought my first home, and lots of people, I'm trying to think of our listeners who are maybe they haven't embarked on this before. You need your down payment. What is the minimum down payment you need, and what are all the extra? You triggered that for me when you talked about an appraiser, but what are the extra things people should be saving for?
So, and same thing, it's a bit of a loaded question because it depends on what is our purchase price. So minimum down payment in Canada, and this is set by the government, is 5% on the first 500,000. So $25,000. If you're over that, it's 10%, and it's just on the remaining. So if we're going to 600,000, it's 25,000 first 500, and then 10% on the remaining. So 10% of $100,000. So your total down payment on that is 35,000.
I didn't know that. That's
good. Yeah. And then, so that's all the way up to just before $1 million. As soon as you hit the $1 million purchase price, you have to have a minimum of 20% down.
Okay.
And then it's a bit of a sliding scale, like anything $1 million to $2 million, it's a bit of a fluctuation. Those are kind of our higher net worth clients that we'll do a little bit more creative and look at different programs. But for getting into the market, yeah, that's our minimum.
So that's your down payment. Then you've got
property transfer tax too. So first time home buyers, anything less than $500,000, you don't have to pay property transfer tax. So you get a property transfer tax exemption. Then there's
if you've never owned a home anywhere in the world.
And I also believe there's like a 5-year limit. So if you owned a home, sold, rented for 5 or 10 years, and you're looking to get back into the market, you qualify now for that first time home buyers property tax exemption again.
Oh, I didn't know that. That's good. Okay.
Yes. So,
but 500,000 being the limit, if you're 520,000, are you paying the tax on the full amount?
You're paying a sliding scale. So it's a proportion, and it's actually listed on the BC government website. So you can go up and you can look up, oh, here's my purchase price up to 550. This is what I'm going to be paying. And then anything over that, you're paying the full amount, unfortunately.
Wow.
It's too bad. It's because it's been 500,000 for so long, and truly 500,000 10 years ago is different than what it was today. So it would be nice to see that limit increased for sure.
Yeah. I know people have been advocating for that, but hasn't yet.
It hasn't yet. It hasn't yet.
Okay. So they've got their down payment. They're going to pay for a home inspection, which is $500 to $700, I think.
Yeah.
Ballpark. Sometimes they can be more.
Yeah, just depending on the property. An appraisal. So we don't always need an appraisal. It's kind of property specific, and over basically the property depends on and how much down payment. And same thing, that's about $500. Can be a little bit more if we're looking at the higher end homes. Can be a little bit less if it's just a condo or something where the strata kind of covers the exterior.
Right.
And then truly property, like that legal fees, like
Mhm.
your property tax,
Mhm.
that's all kind of like we lump that into legal fees, but truly it's kind of broken down, right? It's got,
Yeah.
yes, your legal fees associated with registering the title into your name, but then
Mhm.
there's the buyer's portion of property taxes. So if
Yeah.
the property is $5,000 of property taxes and you're buying it smack dab in the middle of the year, you owe 50% of the buyer's portion of property taxes.
Mhm.
So, and then same thing with strata. If there's outstanding
Mhm.
strata, or you're buying it in the middle of the month, you owe half a month worth of strata. So
Mhm.
the legal fees, I would like to say, are around $2,500, but you also have to
Mhm.
account. It's more of closing costs. It's more all encompassing
Right.
of yes, your legal fees, but then your, like I say, your strata, your property taxes, and
Yeah.
kind of lump sum. So I would say, 5 grand is a good buffer
Cushion.
amount just to
Yeah.
have in case.
So, so if you want to buy a $600,000 property, we'll assume,
Mm-hmm.
your down payment is going to be 35,000 and you
Mm-hmm.
should have another 5,000. Hopefully you don't need to spend it all, but for incidentals,
Yeah.
pretty expensive incidentals, but yeah.
Yes. Yes. We always kind of say 1.5% of the purchase price is a good rule of thumb, just to
Okay.
have any wiggle room, anything like that.
Hmm.
If you
Hmm.
don't have that, it's not the end of the world. We can work with that obviously, but it's just peace of mind and making sure there's nothing that comes up that's a surprise.
Yeah.
Nothing There's nothing worse than being last minute needing funds, right? So
Yeah.
we don't want to be in that scenario.
No, exactly. Okay, we've got a couple minutes left. Any other sort of last minute thoughts or tips, to help people who are driving to work right now or out for a run and they're listening, thinking of, upgrading or getting into the market or what have you?
Yeah, yeah. I mean, I would say if you're planning on selling, if you're planning on buying, either way, reach out to a broker, somebody you
Hmm.
trust. I'm more than happy to do like my services don't cost money. If you want to pick up the phone and ask me a question, I'm here.
Hmm.
Uh, and I think that's the big important thing, is to be available to those who have questions.
Hmm.
I'm not a doctor. I don't self-diagnose. Somebody else shouldn't feel that responsibility to know, what am I going to qualify for? What do
Hmm.
I need to know when selling or buying? So
Hmm.
hands down, reach out to an expert in that field. Talk it through. See what the scenarios are that work best for you and your family. And
I
then
like that.
big thing, pre-approvals, like go make sure you're doing your due diligence as a pre-approval.
Hmm.
And that means supplying documents. You can't you
Yes.
can't go to the bank and say, "Hey, I make $80,000 a year. Here's your pre-approval." Like, no, no, no. I want to see your job letter. I want to see your pay stub, your T4s. Let's see if there's any more income that we can use, and truly dive in and do a full in-depth, thorough pre-approval.
I like
Um,
that.
yeah. And then
Yeah.
there's just so many different programs out there for our clients getting into the market or moving or whatever it is. Like there's so many options out there. And like this year, they say that 52% of mortgages are up for renewal. So
Wow.
that's huge.
52%.
That's huge.
Wow.
Yeah, just
Hmm.
the way that it's worked with the different terms.
Hmm.
So even if you're not planning on moving, don't just sign your renewal. Reach out,
Yes.
see what else is out
That's
there.
That's a great point.
Yes.
And just to jump in, I don't mean to cut you off, but I think it's easy and I mean no disrespect to the banks. It's I
Yeah.
like our banker and the banks are good, but they make it pretty easy. They send you a letter, you can
Mhm.
just quickly sign. We're all busy. We live in a society where
Mhm.
everyone's busy, and our last guest was just talking about how to save on some costs and just how to be smart about it and just slow down and look at all your options. And that's a great one. I mean, I didn't realize
Absolutely.
that the number was that high, but when the bank sends it to you, as good of friends as your banker is with
Mhm.
you, they're probably not going to send you the best rate, the best terms, what
Yeah.
truly makes sense for you and your family.
Absolutely. And that's the thing too, right? If your mortgage is up for renewal, why don't we look at adding like a line of credit so that if you want to turn your property into a rental and then use your line of credit to pull some equity out and buy a new place a year or two down the road, it at least sets you up for success, right? It gives you those options later on versus just signing a renewal and then trying to revisit it later on and look at breaking and having a penalty. And so it just gives you options, just gives you a third opinion to say, okay, what would you like to do? What are you thinking? What's the best fit? How can we make it best for you? Absolutely.
Wow. I think that's great. So tell us your website again. Tell us how people can find you, and we'll link that, on, as we share this on our social media and on YouTube, but lots of people are just listening to this on Spotify or wherever you listen to podcasts and might not have a pen. So say it slowly so they can remember.
So you can Google me. I'm on Google as well. Juliana Wong Compass Mortgages, or www.JWC I'm also on Instagram. I'm trying to dabble in TikTok, but I feel like I'm too old for that now. But
oh my gosh. No, you're not too old.
Yes,
Shannon's got me trying to do it.
Well, that's because Shannon wants the easy road out. She wants you to take the goal for that one.
Oh no, she's mastered it. She's on there. She's got our listings on. Yeah. We're doing business from TikTok now. So
amazing. Yeah, amazing.
We should all be on it. But that was really great. I mean, I got some great takeaways from that, some interesting ideas and information of, things to be aware of. I guess, what's the saying? Knowledge is power. And you shared some great knowledge with our listeners today, with me, that will help all of us going forward.
Awesome. So, well, thank you for having me. I really appreciate it. And
thank you again.
Anybody has any questions, I'm here. Just a phone call away.
Wonderful. And thank you again to all of our listeners. We'll continue to try and find relevant and interesting people to come and share ideas and information with you to help you make decisions about buying or selling real estate in the Okanagan. Have a wonderful day, and we'll see you soon.
Thanks for listening to this episode of Real Estate for Real People. If you want to reach out to the Stone Sisters, visit www.stonesisters.com. This podcast was produced by Podigy Podcasts. See you next time.